Hello, everybody. Welcome to another daily plan. I'm your boss, Joe Boss. And it was an interesting day today. We got a lot of the PMI releases that we were anticipating yesterday to move the market, and they sure did move the market. Pretty much every single market under the sun today has a pretty common theme of it spiked and retraced. We can actually see here on the dollar that quite clearly. Spike and then retrace. Seems like we hit a likely low. That's the probability weighted pivot low for the week. So at this point on the dollar, I'm wondering if the low could be in. Let's go ahead and check our odds here. Yeah, that's a peak. And I have a feeling I was right on the call from last Friday in the week ahead trade plans that these two arrows probably should have been flipped. The expectation to go up should have been after the expectation of going down. It's important to repeat your expectations as you thought them back then, so then when you set new ones going forward, you're not lost in how things are changing. The only hiccup I have, though, with any more additional dollar upside from here is that as we go into NFP, and you can see I have the economic calendar here on the right here. Let's see. Bank of Canada coming in later. We're going to be getting Australian PMI, so let's actually check out Aussie dollar right off the bat here. Not PMI, GDP. Yeah, kind of a similar outlook here. I'm going to hide those colors real quick. Somewhat of a similar color here. We have a spike higher up into here. I'll hide this stuff. So we had the spike higher and then a bit of a retrace. Some guys in the trading group took shots on the long side here. And as we mentioned in yesterday's stream, this is still arguably a spot to be taking shots on the long side. It's just a matter of watching out for the risks of going down here, right? So nominally, longs around here are where bulls like to come in. And if Australian GDP continues to, let's say it surprises, it's above consensus and above forecast for some reason, that I would absolutely expect it to lead the Aussie dollar and the Australian equities markets higher. Let's see, going into tomorrow, we have some construction PMIs, some mortgage data out of the US, Bank of Canada, yeah. Let's see here, the EIA stuff, that's going to impact crude. Oh wow, crude was quite spiky today, huh? Well, hit a likely low area on the probability pivots. Went and slid past this peak here. So, yeah, I'd say it's going to be, yeah, again, this is another situation where, yep, these expectations could have been flipped. So now it's a matter of, do we go to a likely high? Well, that's going to pertain based on how these EIA prints come out. I believe it's mostly going to be this crude oil imports change, crude oil stocks change. I think it's going to be these two here that move a lot of crude. Oh, Fed Beige Book comes out. All right. That'll be good for getting some insight into how the United States is operating at a more local level, at a micro level. And yeah, not much else. I mean, you have the pricing index, the Halifax pricing index in the UK. And if that is continuing to drift lower as forecasted, that could help alleviate some of the inflationary pressures in the UK, which the the central bank in the UK really needs help with, frankly. The BOE, Bank of England. Oh, there's a BOJ speech too happening tomorrow. Okay. That'll be interesting. Let's actually check out dollar yen. Well, dollar yen. Well, that's hilarious. The low for the week so far is right here at the highest probability bin in the ranges. Wow. So we were off by 1 bar and about 2 pips. Sometimes these expectations get nailed, and sometimes they're wildly off. But we try and learn from the charts when they are wildly off. We try and figure out what exactly caused the inaccurate expectation. What is it did we not know? What is it we have to learn about these markets to actually understand what's going on more thoroughly? So then, going forward in the future, we can set better expectations. And this process of setting expectations, updating them, and learning new information every single time we set expectations, improving them as we go along. Well, I think that's kind of at the core of what makes someone a good trader or not. Being able to set good expectations. And at least in this fashion here with just these simple arrows, this is one way of me visualizing to you how I've got along to this process of setting expectations, getting good at future expectations, and as new information comes in, how I update those expectations. Now, on the US dollar side of things, it's really going to be tricky, in my opinion. Because if that NFP does not come in lower, remember forecast is 180K, prior was 200K, so the next number is expected to be lower. But if the realized number on Friday for NFP is not lower, then, I mean, dollar's probably going to stay flat or potentially even get stronger. Because relative to the rest of the world, the United States is still doing quite well. And while I understand everyone has their eyes and sights on the rate cuts that are coming in about potentially 2 to 3 months, 2 to 4 months, depending on what central bank you're looking at, what pair you're looking at. Understand that's still 2 to 4 months from now. So while that can be the net expectation, as we get new inflation data, as we get new employment data, as we get new wage data, if it remains sticky, if it's not moving in a direction towards recovery where prices are going to move lower, it's going to keep these central banks higher for longer. And that's a real risk that has to be weighted into current expectations. So I'm not expecting the strongest of trends to begin occurring, risk-on trends to begin occurring, until we get more of that data. And we'll get some of that data here in March. And a lot of market participants are fairly certain that once we get this data in March for those factors I just listed, wages, inflation, employment from all these different countries, that we'll be able to set somewhat more accurate expectations going into the second quarter, because we are no longer dealing with the high amount of uncertainty and volatility in markets as we were during 2020, 21, and 22. Since 23, the volatility of these reports that have come from, for example, the year-over-year numbers, which, have been kind of moved a lot since COVID. The further we get away from the COVID economics impact, the more this economic data can become, I wouldn't say easily predictable, but it becomes more nominal. It starts to line up with expectations and forecasts more closely outside of a few idiosyncratic risks that might come from, a company shutting down or merging or new regulations or geopolitical reasons. So this is where I say the more you learn about the world, the better at trading you can get, because those things can frankly become the new headline mover for a lot of assets. All right. With the rant for the day out of the way, let's go ahead and continue moving on and checking out some of these other trades. And we're going to see the common theme. If I can just hide these things. Common theme for the day is spikes and retracements. I mean, euro dollar here had a 18 pip spike higher. Okay. Not the craziest one we've seen even fairly recently. That was a 30 pip wick up there. But the retrace here is got me a bit worried about maybe some dollar strength going into the next day or two. I don't know. I'm more or less neutral until we get that NFP or we get more of these economic results. It's just wow, that's a likely top for the week. Yeesh. But then again, going up here, I think we identified going up here on euro dollar as a risk. Yeah, you can see this spot up here. You don't usually get your high for the week too often in this spot here, based on the seasonal data. On the continuous data, taking all historical data into account, yeah, a lot of the time, in fact, it seems most of the time, this is also the bin with the highest probability, 2.397. Oh, hey, Brinsley. Nice to see you in the chat. So yeah. Given any particular week, the high is likely to be in this spot nominally. I don't know if I would call this week particularly nominal, given that, well, if we look at the PMIs that came out, the PMIs were roughly in line with what the flash PMIs gave us for Europe. We're looking at euro dollar here. So we're going to be looking at the European PMIs. And so far, so good. All these PMIs not just came in at forecast. A lot of these PMIs came in above forecast. I believe the French PMIs came in mostly at forecast. Yeah, you could see they came in even just a little bit above. The French PMIs, the flash ones, really surprised to the upside. So it's nice to see some continuing improvement in the French PMIs, even if it's not, above 50. So long progress is being made. The rate of change is going to continue being positive. The expectations and the sentiment are going to continue to improve. In fact, it's because of this somewhat improving sentiment. Some people are thinking about getting more into commodities. I'm not so sure about that. quite yet, but guess what? The guys who've bought gold recently are super freaking happy. Actually, we can check out gold here. See? Spike, retracement. Wow. Let me go ahead and unhide the drawings. Yeah, this is kind of the spot I'm concerned about now. I'm not too sure we're going to see more highs in gold this week, unless it's strictly a US dollar thing. I mean, this is a very, very strong move. There's no sense in me saying that this thing can't go higher, because very clearly you can see this tail of the distribution. We do go higher here, but going higher means it's essentially a guess to figure out where the top actually comes in this week. It becomes tailed. It's like the inverse of a falling knife. You're trying to catch clouds, where every single time you go higher, you're trying to just grab onto a cloud and it just goes right through your hand. Catching clouds and catching falling knives are just the inverse of the same thing. It's actually kind of like with trading Bitcoin to the long side. Bitcoin hit a new all-time high before reversing. It also had quite a volatile day here. In fact, I was watching Tone Vei's last stream, and he had like, I don't know, 8 guys on his stream. He had quite a lot of people on his stream yesterday. And one of them was a guy named Joe Saz. And I particularly like Joe Saz's tool. I think it's TRDO, if I'm not mistaken, right? I think I might be wrong on the tool's name. But he has an order book tool that he's built over the last few years, and I've followed him quite closely, because when it comes down to order book interpretations on Bitcoin, they can lead to some solid interpretations. And going into the stream, everyone's like, oh man, we're going to hit new all-time high, we're going to hit new all-time high. And Joe is probably one of the few people saying, actually, we're probably really due for a pullback. And on any move higher, I'd be insanely skeptical. So it's important to listen to guys who know what they're doing in the field that they are trading. It's important to listen to guys who are experts. You know, I appreciate you guys listening to me and listening to my commentary with the tools that I use. But I find it incredibly important to listen to a lot of smart people. And I mean, the only major limiting factor there is time. How much time you allocate to listening to guys who actually know what they're doing. And weighing the risks between what different experts are saying and what their expectations are. And it takes a lot of time to even, in some situations, even find those people, right? Because, you know, they're not just going to serve themselves on a silver platter to you saying, oh, you know, look at all my stuff. I mean, look how much marketing I do. I just do these streams and I run my Discord, and most of the guys who are in my group are from word of mouth. It's kind of the same thing with Joe Saz's stuff, a bit with Tone. I mean, Tone's never had to do marketing, but he goes to all sorts of great events, and he's been around. I mean, I've been following the guy for a long, long time. Him and Chris Dunn. Yeah. But they network and they do other things, so they're quite well known, and they have a financial industry background. I think Tone was a quant, and Chris Dunn was a securities analyst, if I'm not mistaken. But even with the great background, there are guys who don't have backgrounds in finance who still give great commentary. So just because someone doesn't have a certificate or a degree attached to their name doesn't necessarily mean that they don't do the sometimes the best quality work in the industry. Although usually you'll find very high quality work from guys who do have those credentials. Anyways, yeah, that is quite a pullback on Bitcoin. Everyone seems to be talking about this all-time high still. And in all seriousness, I don't think that this run is quite over yet. We'll have to see as this thing plays out if moving forward, we just get some sideways, maybe a bit of negative drift here, and then continue the run going into the rest of March. I have a feeling that somehow, if the FOMC is dovish at all, if they stay on their current path and say that they're seeing improvement in wages inflation and in headline inflation, core inflation, I mean, they're probably not going to say they're seeing improvements in core or super core inflation, frankly, because a lot of that has to do with these services components keeping inflation sticky still. So until we actually get those services components coming in lower, we get the wages coming in lower, we see employment metrics not going, crazy high. It's likely that the Fed's going to get a bit more dovish and they're going to start saying stuff like, "Oh, we're going to be ready when the data presents itself to begin cutting rates." May and June, like I said earlier, that 2 to 4 month window. May and June seem to be still the target dates. Most people have their eyes set on June for the first rate cuts, for example, out of the Central Bank of Europe and the FOMC. And then later on in the year, or even into 2025, you have the RBNZ, the RBA, the BOC, right? And just because those central banks keep their rates higher for longer doesn't necessarily even mean that their economies or their equity indices or their currencies are going to be outperforming the US. It just means that there will be some carry trades available due to the rate differential. You actually have to see growth in those economies to actually see the relative strength actually come in and trend the asset for a while. It's not just enough to have a difference in central bank policy, even though that can be a large factor in how we set expectations for stuff like prices on almost every asset in the world. Take a look at pound dollar. Sure thing, my man. So it looks like we've exceeded our upside expectation here. We got our spike and retracement. And it looks like we're still seeing some positive drift here. We might not see the pullback. Oh, wow. That is quite a likely high here. Yeah. That is nutty. I mean, look. If things keep improving in the UK, there's a lot of room for improvement in the UK. Let's see here. The PMIs, they sort of came in close to the forecast, close to the consensus, but they missed. However, UK PMIs are in positive 50 territory, unlike France, unlike the sick man of Europe, Germany. So there is good metrics coming out of the UK. I mean, this 3-year Treasury gilt auction coming in higher than the previous. I mean, don't get me wrong, that's pretty good on the currency side of things. Actually, let's go ahead and check out the yield spreads here and check them out on a daily. Yeah, it's still not looking so hot on the yield spread side of things. They do seem to be improving in the short term, it seems, but a lot of the negativity is still coming from longer term spreads holding this thing down. Yeah. I'd say in about a week or two, we should probably see these yield spreads begin to improve. And roughly in a week or two, that's when we'll have ECB and FOMC meetings. So look at that. So maybe one more pullback here on the pound. And on that pullback, there might be some moderate improvement in the yields, these yield spreads. And then the rate differential between the BOE, Bank of England, and FOMC, ECB. So if you also check out pound euro, right? Or euro pound. Yeah, you can see a lot of the positive yield spread here on euro pound is coming from longer term, older yield spreads. So, yeah, probably another week or so. Wow. Oh, yeah, that's on the monthly. Gotta go down here to a weekly. It does look like a likely low on the week, though. It did overshoot a little bit. I would have been a bit concerned looking at this thing down here and seeing the breath of relief here with the reversal. But yeah, still likely high odds up here. Those do look pretty darn good. Wow, a lot. Next week is, I think, particularly bullish. I don't know. Yeah. I would just be careful. I think I said the same thing on Aussie dollar. This reminds me of what Aussie dollar kind of looks like. Yeah, see? A lot of lows around here, but you slide a bit lower and you open up a risk of having another spike into the low 64 handle. So euro, great, British pound. And there's kind of the same look here, right? If you slide a bit lower, you essentially risk a falling knife scenario based on how I'm interpreting this. It seems this would have been a good spot to be taking shots on the long side, but man, and actually that's not that crazy of a stop, 20-ish pips. But it's just a matter of, is now the right time to be taking these shots with these yield spreads still so positive? Yeah, really gonna have to look forward at the next week or two's worth of economic events and figure out what the expectations are for those economic events, if they're likely to improve from here. Actually, I think this housing price index could cause some movement in the currency because it's one of the primary concerns for pretty much every single major G7 central bank right now. It's housing prices. Let's see, anything else here on... Yeah, this is Thursday here. Some US data. Lagarde comes out and gives a speech, so we'll be interpreting that if it's hawkish or dovish here. It'll move euro stuff. Let's see. And then Friday, Non-farm payrolls, unemployment. All the big stuff here. Yeah. Consensus seems to be 200K. Let's see here. Yeah. Coming in that low, that'll definitely help. A lower NFP will help risk on. It'll certainly help. The WASD report. Then this will probably end up moving Canada as well. It's probably not going to be as fantastic, but considering that all this data here for Canada and the US is coming out at the same time, USD CAD is probably going to be quite volatile during this exact point in time here on the Friday. Yeah, so right here, there's probably going to end up being some sort of spike. And frankly, probably a spike lower into a close. Yeah, the close could be in here, but on particularly risk-on data or relatively good Canadian data versus US data, that would put us here in the lower part of the 135 handle here. Yeah. Slightly more bearish expectations for the week ahead, though. So it seems like net things typically improve for the Canadian dollar going into the week ahead or going into the end of the following week there. Again, this is the most likely spot to find the high for the week on the Canadian. So I think there's room to move to these lows here. I'm a bit uncertain about where the actual close is going to be for the week, again, considering both these events are occurring exactly at the same time. So the robots are going to be able to trade this faster than we can interpret it. So might be the spot here if the expectation is for these data points to print well, to print risk on. I don't know, it might not be the worst idea in the world to take the shot short around here and take it around to here or God knows where, depending on how well the data prints. So we'll follow up on this idea going into the end of the week. Who knows? There could be other surprises that come in. Yeah, like a particularly bad balance of trade. Yeesh. Let's check out New Zealand dollar. I know I'm kind of hopping all over the place here, but I'm just, going over my ideas free flow as they come to me, and then bringing up the chart as required. New Zealand also had the spike. Looks like the yield spreads are improving, though. Yeah, again, most of the negative yield spread is coming from old stuff over here. Yeah, so I'd say there's still negative drift going on New Zealand. But again, as we get into the end of this week, beginning of next week, I'd start to look for, let me go ahead and accidentally hit the replay mode. I wanted to hit this, there we go. Lock that in place so I don't move it again. Let's hide this. I'm looking at these closing probabilities for next week, and they are, I'd say, more range bound bullish than anything else. They're not insanely bullish. They're not insanely bearish. Looks like a more nominal positive drift into the close for next week. So this has given me hope on if there's any more significant lows in some of these risk-on assets to potentially take some shots going into that low into end of week or into the low of next week. Let's see here. Anything else on the charts that I might be missing? I think I pretty much went through all the major ones here. So let's go ahead. I believe I already did gold and I already did oil. And I did Bitcoin. Wow, I think I did. I think I pretty much did all my chart analysis already. Yeah, you can see here on the closing odds. Again, we only have 13 years of historical data for this seasonal based indicator. We look at the closing odds here. You can see a lot of closes occur here, but you have a bit of a skew to closing positively. One way you can interpret these closing odds and whether or not you have a positive or a negative skew in your closes for a given week is by looking at which of these 75 or 25% lines is further. This is your interquartile range in statistics. So 50% is your median, 25% is your Q1, first quartile, and 75% is your Q3 or third quartile. And you can identify a skew when one of these quartiles has a greater distance from this median than another. And you can see this 75 is further. So that's 3,800. And this is 2,600. So we have a bit of a positive skew on this distribution. And that absolutely makes sense given how Bitcoin has historically performed. So yeah, most of the time the closes for the week are essentially sideways, but you got clear positive skew here. And then you got a nasty, nasty fat tail here. I mean, look at this. The 1%, the first percentile is like 43,000. That's a nasty, nasty tail on the week. And then same thing up here. This is 83.4K. The 99th percentile way up there. So quite a range when Bitcoin starts trading in the tails and getting parabolic moves. Quite a crazy, crazy tail. Let's see. We can also bring up ETH. Oh, actually. So yeah, ETH looks exactly the same. It looks exactly the same. It has its spike. Very clear, you can see the spike, this big long wick, and retracement. Every single asset today has these spikes and retracements. And then I think the funny thing I wanted to bring up is actually Doge USDT. Look, spike and a bit of a retracement. A lot of closes are just flat here. But Doge has done just crazy. It's done 100% in the last, I don't know, week and a half. And then there's something else, another shitcoin. Pepe. This thing did like 450% in the last 2.5 weeks. People are yelling, oh, it's altcoin season. It's altcoin season. It very well may be, but I would highly recommend that people looking at this stuff also learn from past altcoin seasons, learn from past scams. Listen to CoffeeZilla's new video on his Voidzilla channel where he explicitly talks about how a lot of these altcoins have people who are dumping their bags into them. So please do a bit of history on old projects and even some of the projects that are still around, and do good research on the people involved in these coins. Don't just look at the coin and take it at face value. Actually figure out who's running it, who's programming it. Has anyone who's been a part of these projects been a part of any other projects that are scams? It's very, very important to do due diligence. And if you can't prove or figure out who is running these projects and their notoriety and their affiliation with other projects, you got to be very, very, very careful then trading them anyways, because of how quickly they can move based off false rumors, frankly. These can be quite illiquid markets. So this is just the PSA of be careful, and do as much research as you possibly can in these projects before putting your life savings into them. All right. Well, it seems like I've covered everything I wanted to cover. We've had some pretty good hits on our expectations so far, I think. Not the best that I've ever done. I mean, I remember DXY for like these 2 weeks here, I was spot on. We under-exceeded that expectation. We got close to closing up there, but this particular close was identified as another possible option. So, well, if it's kind of 50-50 whether it closes up here or down here. Again, it's good to be able to go back and see, as time goes forward, how your expectations are changing, to see how well your expectations are matching what is realized in the market. So then you know how reliable, when you do set expectations, how reliable those expectations actually are. And then when you are wrong, either the expectation doesn't happen at all, goes in the totally wrong direction, it overshoots, or it's undershooting, that you're able to learn something from it. Also, I think this should be red, if I'm not mistaken, because it's pointing down. So red, just fix that. So I'll go ahead and say thank you all so much for watching these every day. It seems like the streams each day are getting more and more popular. If you guys are sharing these, I absolutely appreciate it. Maybe the YouTube algo is helping me out, because right now a lot of people are looking for finance stuff to watch right now. But I'll be here again tomorrow, same time, 2 p.m. Pacific, 5 p.m. Eastern, and we'll go ahead and look at these expectations and how what we said today follows what we think is happening tomorrow. All right, you guys. I'll see you all in a bit.